Good evening, buddy. Okay, we're going to do a little bit of PowerPoint stuff here, just to kind of do a rhetoric review. A lot of people ask about the T-line. So we're going to do kind of a Cliff Note version of how to use the T-line and how effective it is. So if this looks, what do I want to say, rhetorical, it is. It's to kind of get everybody's thinking process over to how candlesticks work and what the main elements of candlesticks are. So if we basically explain what are the signals, we have to realize that the signals are graphic depictions that over the last 400 years, the Japanese rice traders have illustrated for us. So that's as simplistic as you can make it as far as seeing when there's been a change of investor sentiment. And the thing that got me turned on to candlesticks 40 some odd years ago was the fact that after being a stockbroker for 8 years, I realized that the brokerage firms had no more idea what would go up or down than anybody else. Um, they all had their high-paid analysts, but all they were doing was telling you this is good company as far as the operations, but that meant nothing as far as what the perceptions were. So the candlestick signals, being the graphic depiction of human emotions, is the most solid of all the indicators you're going to come across because it's what people are thinking about a trade situation that makes them go up. So when I started using candlesticks, or I say when I started using candlesticks, I realized that every time I put on the trade, the probabilities were in my favor. And I finally got to the point where I could expect about 70% of my trades would be winners. Now, some of them might be only 0.3%, some of them might be 300%, but the one thing that kind of swung my thinking around prior to candlesticks was anytime I put on a trade, it should go up because I'm a smart analyst and I know what's going on in the markets. It should go up. What I realized, though, that even if you have the best program in the world and you got 70% winners, what else can you expect? And that's basically, you can expect 30% losers. So once I got my mindset more to that, then I thought, all right, if I've got 30% losers, I know that for every time I put on a trade, I've got 1/3 chance that I better close it out. So what's the other element? The other element is what indicators can I add that make it so I've only got 28.2 or 27.9 or 29.3. Anything that would improve the probabilities of being in the correct trade, obviously, over the long run, was going to create a huge advantage. So through the years, I discovered that huge advantage was the T-line. The T-line is basically the 8 exponential moving average. And there's a very simple concept to that. That if you see a candlestick buy signal and a close, yeah, this is being recorded because I'm sure, Stuart, you're going to want to go back and listen to this time over and over again. I'm sure of that. Anyways, here we go. So, very simple rule. If you see a candlestick buy signal and a close above the T-line, you can hold on to it as long as you don't see a candlestick sell signal and a close back below the T-line. Very simple. What this did for me was it kept me in trades where I normally might get swung out of it. So once I used that combination, I was starting out before candlesticks. I always could brag that I was the worst investor in the world. Once candlesticks came along, it turned me around 180 degrees because I could basically see graphically when I was the seller when everybody was panic selling, and I was the buyer when everybody was exuberantly buying, meaning everybody. I was just like the common investor. My emotions were telling me when things looked great, Oh no, when you get done with candlesticks and it sinks in, you're going to start seeing when it's time to buy. So if you use that concept that if you see a candlestick buy signal and a close above the T line, you can stay long, or if you see a candlestick sell signal and a close below the T line, you stay short. Now, one screen that I didn't put in here is when you have the signals at the T line, it becomes very important. Now, why is the T line important? As you can see on our charts, very simple. The 200-day, 50-day, and 20-day simple moving averages. Because everybody and their brother has those moving averages on their charts, and the major money managers use those moving averages to make their decisions about what they're going to do with their portfolio. The advantage we have with candlestick analysis is we can see graphically what investor sentiment is doing at important technical levels. So if we see buy signals like bullish haramis right on a 200-day moving average, that tells us something. But the T line, the 8 exponential moving average, the black line, has a concept to it that is what we call our unfair advantage. If we understand the fact that candlestick signals are the graphic depiction of human emotion, and the T line, which doesn't act like a magnet. Now, the other moving averages act like magnets because everybody's waiting to make their decisions once something gets to that level. Nobody has the T line or the 8 exponential, or not enough people to make it effective on their chart. So what does this tell us about the T line? It acts like a natural support and resistance level for human nature. It's like has Fibonacci characteristics built into it. How soon after the candlestick signal does the close above or below the T line? 1 day, 2 days, same day, Barry, and we'll get to that. This is why we're doing this exercise, because to me, number one, your bread and butter is learning the candlestick signals. Secondly, just learn the patterns. There's about 8 patterns that work effectively. But third, use the T line. So if I see a setup, now this is what we call our doji sandwich. Remember, our doji sandwich is a bullish candle. There's the bullish harami telling us the selling has stopped. And where did it stop? Right smack dab on the 200-day moving average. And so number one criteria, Barry, is the signal is our first criteria. The T line is our confirming criteria. So if I see a bullish harami and I see them start trading the next day positive, yeah, I'm going to be buying, because that's exactly what we'd expect after a candlestick reversal signal, especially with the stochastics down here in the oversold area. Does the buy-sell signal and the T-line applies to all charts? You could be looking at a 1-minute chart. You could be looking at a monthly chart, everything in between. If you just come back to the simple definition of a candlestick signal, which is it's the graphic depiction of everybody buying and selling during a particular time frame. Doesn't matter whether that time frame is 1 minute, 5 minute, 15 minute, or daily, weekly, or monthly. So as long as you keep that simple definition in your head, this chart could be a 1-minute chart, and the graphics or the criteria remain the same. You still have the 200, the 50, and the 20, and you still have the T-line, and you still have the stochastics, all the same. If I had this up on my live screen, I could click over on the 1-minute chart and flip to the 1-minute chart and look, everything would be the exact same on here. So anyways, notice the doji sandwich. So if we know the simple rules of candlestick signals, and we know what a doji sandwich, oh boy, Richard, I don't know how to help you there. You might have to log off and log right back on again. And we know the simple rule of a doji, which is if we see it's going to move in the direction of how they open it, they start trading positive, what do we know about this candle right here? It's going to be the same magnitude as this candle right here. And what's that tell us about the T-line? It tells us they're probably going to close above the T-line. So back to, was it Barry's question? I forget whose question. Was I can be buying immediately on the confirmation of that doji, anticipated doji sandwich, and that it's going to close above the T-line. All right, so, and then we can see what the results are. We can pretty much stay long. There's one caveat to our basic rule, that you can stay long until you see a candlestick sell signal and a close below the T-line. The caveat is the further away you move from the T-line, the higher the probability it's going to come back and test it. And we'll show how that works here also. So what we're basically showing is things that we know are setting up. Now, these are not unusual patterns or setups. For example, this is today's chart on CMCM. There's our little morning star type signal. There's our doji, right smack dab on the T-line. If this opens positive tomorrow, what's it telling us? Well, number one, the rule of the doji, it's going to be moving positive. Number two, it's probably going to do a doji sandwich, which means we want to be buying immediately. So a morning star followed by a doji sandwich, what do we give that name? That's called your McMuffin, that morning sandwich. And we know the results of a doji sandwich, it's more upside. We know the results of a morning star confirmed, more upside. And so if we can analyze the chart, which is very quick, very visual, we can see there's a trend channel. So if we're buying tomorrow, where do you think our likely target's going to be? Probably back up to the top of the trend channel. Now, does that necessarily mean you buy all stocks that look like it has a high probability of moving in the right direction? Maybe not. If this was a move from here to here and it was only a 4% move, you may not want to waste your money on something with so little a percent move. But if this move from here to here was a 15% move, yeah, that makes it worthwhile. Ron, we're not buying stock lines. We're not buying moving averages. We're not buying stochastics, anything. No, stochastics, we're not trading stochastics. The only purpose for the stochastics are very simple. The Japanese rice traders say, if you see a candlestick buy signal in the oversold area, it's time to buy. If you see a candlestick sell signal in the overbought area, it's time to sell. If you see a candlestick buy signal in the overbought area, it doesn't really mean very much. Conversely, if you see a candlestick sell signal in the oversold area, that doesn't mean very much. Gerald, that's another point that we'll be getting to. Obviously, we have to take into consideration that if this was going to be a buy tomorrow, and how do I get that thing off of there? If this was going to be a buy tomorrow, we wouldn't want to see the market opening up down 140 points. Even if it opened positive tomorrow and the market was heading down, you don't have to jump in. You can wait a little bit, and that's part of our entry strategy setup. So the whole point of using the T-line is, what are the probabilities once we see signals and it starts trading above the T-line? We can be buying immediately knowing that we are in a very strong uptrend. Doesn't matter what type of chart setup you have. SanDisk broke this downtrending channel. Bullish Harami confirmed, close above the T-line. How long do we stay long? Until we see a sell signal and a close back below the T-line. If we're buying back in, Morningstar signal, what do we need to see the next day to confirm the Morningstar signal? We pretty much want to see that their buying is coming in. Stochastics, yeah, are kind of a secondary indicator. First of all, I'm looking for buy signals in the oversold area. I'm looking for sell signals in the overbought area. That's my number one criteria. Number one criteria is the signal, and then where is it occurring? Number two criteria is where's the T line. So there's going to be times, again, if we want to buy after a candlestick buy signal and a close above the T line, there are going to be times when you're way down here and the T line's up here and you see a buy signal. But what's our number one criteria? A buy signal. So if we see a buy signal way down here because the price had come down real fast, where do you think our first target is going to be? Remember, the further away we move from the T line, the higher the probability it's going to come back up and test it. So we'll ride it up, see what it does once it gets to the T line. A market can stay overbought or oversold longer than you can stay solvent. It's a lagging indicator. The stochastics are just another traffic sign. Yes, we're just using the stochastics to tell us where we are in that trend. So today, Wynn Resorts did a nice hammer signal. Where did it do it? At the bottom of this trend channel. And they gapped up through the T line. What's this tell us about our trend? We're probably still in an uptrend. Okay, do you buy signals that mostly tend to have a tail to it? No, it doesn't matter. There's 12 major signals, 6 buy signals and 6 sell signals. This happened to be a hammer signal. Hammer signal has a tail that's 2 times greater than the body. Stochastics in the oversold area. There'll be other signals, buy signals, like a bullish engulfing signal. It has no tail to it. So again, the bricks and mortar of candlestick analysis is the 12 major signals. If you understand or if you recognize what the signal looks like, and because the Japanese rice traders not only identified the signal, but told us what the psychology was that created that signal, when you understand what the psychology was when you're recognizing a signal, you pretty well have a grasp on what's going to move prices as well as somebody that's been trading in the market for 50 years. Let's see. If I'm reading as fast as I can, when do you say open up? Do you mean from the close or the previous high? No, just positive open from the previous day's close. Remember, the important aspects of candlesticks is 2 major decisions. Where are they opening it and where are they closing it? The tails or the shadows are just the trading range. But it's the open and the close that are what makes candlesticks that much more accurate. You have a short signal at 7. You also go short. Yes. I don't know at 7, but yeah, we'll get to that. We're going to go through these real quick because these are videos, and anyways, let me go through these. So anytime I see a buy signal, especially where's a doji sandwich right here at the 50, notice how long we stay in this one till we see a candlestick sell signal and a close back below the T line. So what happens with candlestick analysis is it basically puts us in situations where the probabilities are great that we're in the right direction at the right time. Another great element of candlestick signals is it tells you when to get in and it tells you when to get back out, which could be immediately, part of that process of cutting your losses short and letting your profits run, which most other investment advisors tell you how. They tell you to cut your losses short and let your profits run. They just don't tell you how to do that. Or if we see something that we can identify as an indecisive reversal. Notice how there's a bunch of dojis down here. Remember what dojis represent? Indecision between the bulls and the bears. What's the close above the T line? Tells you they've made their decision for that next route. What is the time frame on this chart? These are probably hourly charts or daily charts, I'm sorry. But as I say, this could be a 1-minute chart. This could be a 10-minute chart. My stochastics to 1233, slow stochastics. 1 day, hour, 5 day, 1 hour, 5-minute chart stay the same. Buy or sell signal. Solomon, I don't understand the question. You can use, if I was buying on a particular day because I think we're heading in the right direction, and I'm getting ready to enter, then I can flip to my 10-minute chart, my 5-minute chart, my 1-minute chart, and get a much more precise entry. So again, the 12 major signals and the use of the T-line, and this is what the T-line is, what improves that probabilities that you're in the right place at the right time. I mean, there was possibilities you could be buying down here, but notice what none of them were doing. They weren't closing above the T-line. This was told us that there'd been a change of investor sentiment. That was the time to buy. Would you say that a red candle with a long tail and the body is small and at the top, would that be a sign of upcoming accumulation? No, that's your shooting star. That's telling you there's a reversal to the downside ready to occur. You have the 3 EMA in your software, but you never mention it on the chats. That's usually used for much faster trading, or the further away you move from the T-line, the 3 T-line becomes more effective. So yeah, you will see me use it in the chats where there's been a few today that were backing off, but they were supporting on the 3 T-line, so it means they weren't selling off very, very hard. Okay. All right, let me keep skipping through here. All right, so if you can use the T-line, we know a fry pan bottom breakout will produce a very strong price move, but how long do we stay in that price move? Very simple, as long as we don't see a candlestick sell signal and a close back below the T-line. Same thing with a dumpling top. These are all very effective patterns. A dumpling top is the opposite of the fry pan bottom. Big, slow, rounding top that tells us they're going to give a slingshot effect to the downside. And again, these are patterns that occur all the time. Look at Dish right now. So we just went through the criteria that we're looking for candlestick buy signals when they're in the oversold area. But look what's happening here on a pattern. This pattern breakdown usually occurs as the investor sentiment starts getting more negative, and we're already in the oversold area. So there's a different criteria on a pattern than there is a signal, that more than likely you're going to start breaking down hard even though you already are in the oversold condition. Is a cradle pattern the same as a fry pan bottom or saucer? Not quite. A fry pan bottom usually has a very flat bottom to it, and I'll try to show some of those when we go to the live charts. Is your overbuy at 70 or 80? 80. One has to decide what kind of trader they are. Swing, yes. So that's how you use your different time frames. I used to trade the E-minis off a 1-minute, 3-minute, 10-minute chart combination. But I was sitting there at the chart or at the desk the whole day, just flipping back and forth, maybe 100 trades a day. As we get older and more mild, I usually trade on an intraday basis off the 10-minute chart. And then my swing trading is just off the daily charts. So if we can identify patterns, we can use the T-line. Notice what happened here on this one. They couldn't really move away from the T-line, and notice how indecisive it was. And the slow curve took us up until when? Until it was time to close out the position. Today, notice ABUS just came out of this slow curve and came out of this big fry pan bottom, and look what's happening. It's breaking out to the upside. So just identifying these patterns, whether you're looking for a J-hook pattern, which is very easy to find, where it comes up strong, pulls back, and notice how the T-line holds it up. They can't sell it off. The next move, even though your stochastics are up here in the overbought area, you can start buying on the next buy signal because we know wave 3 is going to be equivalent to wave 1. This is what we call a classic pattern, which we make a lot of money with. And you see that fry pan bottom. What do we expect coming out of a fry pan bottom? Very strong price move. What's the prerequisite for a J-hook pattern? A very strong price move. Then it consolidates, and then the move continues. Anytime we can see a signal or a pattern, and we use, now notice right here, we could be buying down here on the bullish confirmation of the doji or the bullish harami, because where do you think our first target was going to be? Up here to the T line. Did kind of a doji sandwich. And what do we expect after a doji sandwich? More upside. But had we bought in here and it got up here and started selling off, what was that telling us about the T line? T line was still acting as resistance, close it back out. So hopefully on a bad trade, you at least broke even or maybe even made a little bit of money. Once it goes through, now look what type of pattern we have. A J-hook pattern. And we can see what type of signal started this one back up, that flutter kicker, which told us this wave right here is probably going to be the same magnitude as this wave right here. This is all based on improving your probabilities, just telling you what was happening. This is what we call your best friend, a doji in the oversold area followed by a gap up. And notice what this gap up did. Took us right back up above the T line. And what do we know about a best friend signal? Not only is it usually going to be a very bullish move, it's going to be a very strong bullish move. So if we start seeing a bullish move from here, what can we see? If we cut the chart off right here, what were we seeing? We were seeing that J-hook pattern. So it just puts us in high probability situations, especially when you see the signal, best friend signal, and a close above the T line, and what type of pattern it is setting up. Yeah, Jim's usually throwing out those definitions for us. Thank you, Jim. So this is what pattern confirmation is for, or what the T-line is for, pattern confirmation. Notice when they came up and they failed at the, oh man. Oh, they failed at the 50, gap down. So when they started trading back below the T-line, where do you think the next target was going to be? Back down here to the 200-day moving average. That meant not only were you ready to take profits up here, and notice what happened when we got up here. This is why if we're buying down here, always get people saying, where's your next target? Well, we probably think it's going to be up at the 50. So what do we do when we get to the next target? See what type of signal we have up here. Once we got up here, what do we have? A doji spinning top indecision. That told us in the overbought condition, more than likely they weren't going through. So the prudent thing is you close out the position. And what's the worst case scenario? It opens and trades positive and goes through the 50. You can always buy it back. But the probabilities say it's time to get out. Joseph, very easy scans. And I think the scans are even on our website, where all you have to do is copy and paste them depending on which software or scanning software you do. But if you can say the signal, you can pretty much write the formula for it very easily. So the best friend signal is a doji below stochastics of 20, followed by the next day opening above any of the previous day's trading of the doji. That's your best friend signal. You showed a J-hook a few slides back where the candle closed below the T-line. Wouldn't that be a sell? Oh boy, I don't know which one it was. Oh, right here. If this was, yes, we would have closed this out. But then look at your bullish flutter kicker. We would have bought it right back again. So I have no qualms. It used to be if I closed something out and they started back up, I thought they're not going to fool me and getting back in and then taking it right back down again. Well, at least now I know what type of patterns to look for. And if they're taking it back up with a very strong signal, the flutter kicker signal, I know to close it out here. I have no qualms about closing it here or closing it here and buying it back here, knowing that when I got out, the probability say it was pulling back, and when I got back in, the probability said I was heading back up again. If this is a 10-point move, and I only got 8 points of it, but I know those 8 points were always when it was moving in the direction I thought it should be moving in, that's fine with me. I would rather have the compounding effect of being in the correct trades much greater than holding something that might be pulling back. Steve, no, volume, we're not buying volume. A lot of people say, I want to see volume going up as the price goes up. Volume and price have absolutely nothing to do with each other. If the price is going up and there's nobody willing to sell, it's going to keep going up on low volume. We're buying price. Now, the only time volume does become a big issue or a bad or an added plus is maybe on this day or this day you have huge volume, which means there's been a drastic change of ownership, which usually means there's going to be, that adds a little bit more fluffy confirmation that there is a reversal in progress. If I see a signal that's a good distance away from the T line, I'll buy immediately. Again, number one, the criteria for candlesticks is the signal. The confirming indicator is the T line. So if I'm buying down here, all I'm doing is watching to see what happens if it gets up to the T line. Or if it starts failing, I come right back out of the trade. A flutter kicker is, if you know what a kicker signal is, a kicker signal is when you have a candle that opens and then closes lower, a red candle. The next day, they gap it up so where they're opening at or above the previous day's open and going the opposite direction. Well, flutter kicker is, you have a red candle, the next day they gap it up, but they do a doji above the previous day's open. But we know the simple rule of a doji. If they open up positive, they're probably going to go positive, which means if you took that little flutter out of there, you basically have a kicker signal. On a 60-minute chart, you get a kicker signal. How long is that good for? Oh, I don't know. You don't know, Gerald. All you know is when you buy a candlestick buy signal, you get ready to sell when you see a candlestick sell signal. It could be 2 days. It could be 30 days. You just have to see how long the trend is going to be. All right, let's pattern confirmation. That was the blue ice failure. There's the J hook. Notice all the inverted hammers down here, and then it closed back up above the T line. I told us if it opened positive, what type of pattern were we seeing set up? There was that J hook pattern. And what was confirming it? The fact that they weren't closing back below the 50, and now they're back up above the T line. So it also works for taking profits at the optimal points. Remember, the candlestick signals have truisms. The further away from the T line, the higher the probability it's going to come back and test it. So that makes even additional confirmation that if you're up here in the overbought area and you've moved a good distance away from the T line and you start seeing reversal signals, get ready to sell on the first signs of candlestick confirmation. And what's our simple rule of a doji? It's going to move in the direction of how they open it after a doji. So after this doji, they open it lower. Where do you think the first target's going to be? Back to the T line. They might come down to the T line and bounce back up, but why risk it? You take your profits, because that's the whole point of looking at the probabilities of candlesticks. And if it does do a J hook pattern, you can always buy back in. It also, that same concept is, if we've got a pattern, and these are very high profit patterns, these slow curves, when do we take profits? Well, notice what happened here. It just skyrocketed. And what's our criteria? The further away we are from the T line, the higher the probability it's time to take profits. So once it gets up here and I'm that far away from the T line, I just simply go to my 10-minute chart and watch to see what the 10-minute chart is doing intraday. As long as it stays above the 10-minute T line, you stay long. If it comes back down, if you're that far away from the T line on the daily and the 10-minute chart is showing a sell signal and close below the, coming back below the T line, you take your profits up here. Do you ever look at volume? The only time I look at volume is making sure whatever my trading universe is big enough for me to get in and out of that trade without having to wait or wait for the market makers to do something for me. After closing a trade that closed below the T line, for long, how often do you follow a stock after you've closed the trade to see if the pattern is still effective? I usually keep it on my main watch list for maybe 2 or 3 more days to see if the day they closed it was just a day, and especially depending on the length of the trend. Um, if that trend has been consistently long and they finally have one day where they close it, I'll give it an extra day but my criteria for that next day is it better open positive and trade positive. If it opens lower, I close it out immediately. So anytime I start moving away from the T line, remember, the Japanese rice traders put into graphic depiction are very simple emotions. Where do most people buy? They buy exuberantly at the top. So once I started moving up here, you go to your 10-minute chart. Same thing with something like this. If you move that far away, and I know I'm that far away from the T line on the daily chart, when I get up here, I'm going to my 10-minute chart to see when the 10-minute chart's turning over. Then I'm taking my profits. So the nice thing about candlestick analysis, I always tell people, is does every trade have a huge return to it? Definitely not. But the probabilities of being in a situation where you're participating in a big price move is that much greater. Oops, here's one. Notice how far away we are on a big blast that day. Should we take profits up here? Well, if it's up here, it's a big green candle. There's no sell signal. However, if you flip to your 10-minute chart after a big price move, when's the appropriate time to take profits? Right here as you're coming back down to the 10-minute T line. If you're up, whatever this is, 14%, 18%, 20% in one day, most people are happier than a pig in doo-doo to make 10% on their portfolio in a year. We're looking for trades where we're looking for that big move. Then we've got a much easier criteria for telling us when to take profits. Notice that this is the 10-minute chart. If you took this off, you would know whether this was a daily chart or a 1-minute chart or a monthly chart. So what that basically told us was that in this big move, we're taking our profits up here instead of waiting for the daily chart to tell us that we've got a sell signal. Works just as effectively on the tick charts. What would your definition be as far away? You can visually see what the norm is and what the excessive norm of being far away from the T line. So candlestick signals use the most consistent indicator in the world, and that's human emotions. And if you apply the T line to your candlestick charts, on any charts, if you just put the 8 exponential moving average, again, if you use the combination that candlesticks are the graphic depiction of human nature, and the T line is kind of a Fibonacci number of showing the support and resistance level of human nature, when you add those two together, you've got a very powerful combination. So let's see. We're going to go to live charts here in a minute, but before we do that, Pat is putting out a special that for 17 bucks, and for some reason we're stuck on 17 bucks, you get the training video of Unfair Advantage for 147. Plus, she's throwing in our Eliminating Emotions, which is a 100-page ebook that usually retails for 129 bucks, throwing that in for free. So a lot of people say, well, why do you give stuff away like this? And the answer is, when I was learning candlesticks, I would always ask people, and this was back when, shoot, just about the same time that the internet started having investment chat rooms, which were nothing more than high school food fights. I would ask people, why isn't everybody using candlesticks? They make so much sense. And the answers were because there's too many of them to learn, and they don't always work. And I always came back to the conclusion that if they didn't work, we wouldn't be looking at them today. And going through the years, out of the 50 or 60 candlestick signals, you didn't need to learn them all because most of them didn't occur often enough to waste time, mental time, or energy on using or on learning them. So the 12 major signals that I came up with over the years was nothing more been seeing which signals and patterns work the most effectively and the most consistently. Yeah, because I'm such a nice guy. So anyways, 17 bucks, you're getting a good amount of value, and the reason is once you see the common sense and candlestick analysis, yeah, Becky put up the link there to get it. It works just as well with Forex, just as well with going short, yes. There's 6 basic buy signals and 6 basic sell signals. Are there other indicators like MACD just for additional noise? On some of my charts, Ron, I have MACD there, but it's just an additional fluff. It's kind of a lagging indicator. Let's see. Bill, that's what we're going to get to here in a minute on the live charts of how you put the weight of what the overall market is doing, especially when you're setting up your scans or going through your scans. So anyways, with that, Jim, let me close this down for 1 second. And I will bring up the live charts now. And you'll get people that have analyzed candlestick charts to I'll tell you what it is. So you learn a lot faster. I've done the entire Steve Neeson course. Vic, I think. Oh, a lot of people ask, what do you think of Steve Neeson's course? And my answer is, I don't like to criticize anybody until I've walked a mile in their shoes for 2 reasons. 1, if I piss them off, I've got a mile head start, and 2, I still got their shoes. I think he gives you too much detail for learning candlesticks. Oh, let's see. It's we've got some specials where you can get in. Right now, all I can tell you is email. Becky, can you type in Abraham's link? It'll get you the ways to get in as a member and as a pro. Now, we've got 2 chat rooms. We've got the main chat room, which is where everybody's learning how to use candlesticks on different signals and patterns. And we also have the options/futures room for those people for trading obvious options and futures. All right, so the one thing I think you'll learn with candles is you don't have to over analyze them. Once you learn them and you understand what's happening, they're very simple. It's just simple common sense. So somebody was asking, well, how? Because yesterday's comment, I said we should be back up above the T line, but be very careful of another big downdraft day. And the reason I put out that warning was, notice what happened on this day. The Dow closed below the T line. And notice what that was in effect to the rest of the trend. You can see all the way down here, there was never a day since early February that they closed below the T line. So we've been up here in the overbought condition. We've never closed below the T line until Tuesday. Now, if they had brought it back up and kept it back up, that would have been fine, except this had a little inkling of a warning, which was they had enough selling pressure after a month and a half to close below the T line. Even though they brought it back up, there was still that little chink in the armor. So I put out in the afternoon comment yesterday, we should be in an uptrend, but be careful for another big downdraft, because I was kind of concerned that this was now a change of investor sentiment. Wish someday to have a special to offer. Bill, the futures room, fortunately, because of the leverage of futures, I'm thinking that most people that have joined up have already, within a week, paid for their annual subscription just on some very simple trades. And I'll show you some that we're doing. How much weight do you give to the shadows? The shadows tell you what's happening. And that's a hammer type signal. So each signal has a element to it. Hammer signal has a body that where the tail is 2 times greater than the body. The doji has tails both sides and closes right about where it opens. So you've got tails on the doji, the inverted hammer, the shooting star, and the hanging man. They've all got tails, and they're all signals. So anyways, this told us something up here, that this day that closed below the T line, which it hadn't done this whole time, was telling us the selling force was starting to pick up a little bit of strength. At the same time, we know that the Japanese race traders identified the signals that told us there was indecision. That is the dojis, or the spinning tops, that sort of thing. But look what was happening in the NASDAQ up here. Doji, that's indecision, then a big up day, then down days, then an up day, and then down day. So what's that telling us? That's telling us there's indecision, and the Japanese race traders tell us that when you start seeing lots of indecision, that's usually the beginning of a change of investor sentiment. How much weight do you give the shadows when drawing trend lines? I usually draw a trend line wherever you can see, observe the obvious, whether it's the top of the shadows or it's the bodies, or sometimes it's a combination of both. You don't have to be that exact. I mean, right, you can see there was kind of a trend channel off that tail through here, same through the tops. TJ, hang on to your individual ones. We'll get to them here in a minute. I want to go through some of what is affecting the market and what sectors to be in. Now we can see in crude oil, this is one of your common moves, is that when you break through a resistance level, what happens? They usually come back and test it. This is crude oil, the June contract. And then notice what happened back here in the oversold area. Kind of a spinning top, and then they gapped it up. Now they're starting to trade positive. What's that tell us? We're probably wave 1, wave 2, right here off the 50, going into wave 3. So if this is crude oil going into the next wave, that means some of the crude oil stocks that we're going to look at are moving positive. Same scenario with gold. You can see what happened with gold. It came up and moved back, and this is why the 50 and the 200 act as magnets. If you were a big purchaser of gold and you saw it drifting in this direction, where do you think you were going to wait to see if it's going to act as support? Probably once it got back down here to the 50. Was it acting as support? Well, there's our bullish engulfing signal. There's another bullish engulfing signal. And now they're trading it up a little bit after hours, and they've broken this downtrending channel. So what do I anticipate from this pattern? This is wave 1. This is wave 2. Now we're going into wave 3. That means a lot of our gold stocks, like SA, there's wave 1. There's our J-hook pattern. There's our left-right combo. There's our breakout of this downtrending channel. And what happened when they got back up to the top of our J-hook pattern? Was there resistance? No, they gapped it through that level and headed up. What's that tell us? They have no resistance here. We're probably in wave 3, which will be the same magnitude as this wave right here. So all the gold stocks were acting well. There's AU. You can see the little slow curve. You can see where they broke it out today. You can definitely be a buyer of this one on positive trading tomorrow. Nugget, which is the ETF, the 3 leveraged, what did it do today? Well, after a left-right combo yesterday, they gapped it up through this downtrending channel. What's that tell us? We're more than likely now in the next wave to the upside. This is because human nature trades the same way time after time. It's a wave, consolidation, then the next wave. A left-right combo is a doji, a little left jab, the bullish engulfing signal following it. That's a very high probability, high-powered reversal signal. And notice how this uptrend started. Came out of this little fry pan bottom, and where did it break out? Right where the fry pan bottom started, and how they do it, they gapped up through that level. So, again, this is not rocket science. If you can identify the patterns, then you know what your probabilities are and what your upside or what your expectations will be. Oh. This is one of our first recommendations. This is coffee. Notice the downtrend, and how did it start? With a big bearish engulfing signal and a close below the T-line. How long do you stay short on this one? Until you see a buy signal and a close back up above the T-line. Unless you get too far away from the T-line, then we just start looking for buy signals in the oversold area. Coffee, or not coffee, but cocoa. Where do you start shorting this one? Right up here. Let's see, get rid of that. Oh, still can't get rid of that. How do I get rid of that? Go. Notice where the evening star occurred, right smack dab off the 200-day moving average. This is observe the obvious. The obvious is if you've got a candlestick sell signal, and this is a candlestick sell signal, a big up day, a day of indecision, and the third day closes more than halfway down this candle, what did that tell us about the 200? They weren't going through the 200. They're probably selling off. What confirmed that? The next day they opened lower and closed below the T-line. How long do you stay short? Until you see a candlestick buy signal and a close back up above the T-line. Very simple. Nugget seems choppy at the top with closes below the line. Yes. When you started getting up here, which direction was it going? Couldn't tell. It was chopping around. What's the advantage of candlestick signals? Seeing what the trend is going to be. So not only can we see when a trend is in progress, we can also see when a trend is not in progress. So if we're trying to put our money in situations where the probabilities are in our favor and we can see we're in an area that we can't tell which way it's going, you get out until you see the next pattern setup. And the nice thing about candlestick scans, whether you're trading the futures, options, stocks, you're always going to have more trading prospects than you're ever going to be able to handle. Where would you have gotten out? Oh, over here, I don't know. Probably when it broke this level here, it's when you started going short. But this was a good sell signal right there. I mean, that was an obvious sell signal. So anytime we're trading something, we're looking for the signals or patterns. There's, again, right smack dab on the 200 for the June live cattle. Doji, what's our simple rule of a doji? They're going to move it in the direction of how they open it after a doji. If they're opening it lower, what's that tell us about the 200? That was our resistance level. It's starting to head down. How long can you stay short on this one? Just again, until you see a candlestick buy signal and a close back up above the T-line. We closed it out yesterday because it formed a bullish inverted hammer harami in the oversold area. The odds were getting too strong that we were back on a resistance level, so we took our profits. Something like live lean hogs, again, there was that doji, there was that big morning star signal. Where did they do it? Right smack dab off the 200. Stochastics coming up. A doji right in here. What's our trading strategy now? If it opens positive tomorrow, we're buying because it basically tells us we've got that McMuffin, a morning star signal followed by a doji sandwich or a morning sandwich. Tells us we're probably back up in an uptrend. With leverage stocks, 10 minutes chart work? Yes. Yes. Remember, It doesn't matter what you're trading. It's all based on human nature, no matter what you're trading. Different time frame, Dave, hour, 15-minute chart, candlestick, signals. Yeah, they're all the same. Yes, there is one for the yen. I can't remember what it is. Oh man, I can't read all that, TZ. What vehicles do you use to trade in the commodities? They're individual users? Yes. A lot of people like to trade Forex. That to me is too complicated. If I think the Dow or the dollar is in a downtrend, I'll just short the dollar. If I think the euro, because the dollar is in a downtrend, the euro should be in an uptrend, I'll trade the euro long. Notice what's happening right here. We're in the overbought area. Remember, if one doji means indecision, a series of dojis means greater indecision. If I was going to short the euro, what's a safe place to do it? You just put a sell stop right here. If they come down through that direction, that tells you exactly which way they're going. I don't have to worry about whether it's going to wobble in here for another 3 days, 5 days, 10 days. If they came down through here and hit my stop, I know I'm heading in the right direction. Okay, so let's take a look at some of the, we'll do this real quick. We closed out MKTO today, which it should have been. We had a bearish Harami. We're in the overbought condition. Stochastics are rolling over. And if we know that the markets are starting to roll over and we're starting to see sell signals confirming in the stocks, why hold on to them? Where's this likely going to come back to? Well, break through the 50, it's probably going to come back and test the 50 as support. So the probability is after a bearish Harami and a bearish engulfing signal and a close below the T-line told us it was time to get out of that position. What size account do you need to trade the futures, and do you have anything that can help somebody learn about them? Robert, I've got probably 4 or 5 training videos on our website. Ed asks that when I tell Jim to do the double line, just put in your stock symbol that you would like to look at, and we'll have to probably keep it to one symbol to everybody tonight because we've got a lot yet to look at here. BRKR in a fry pan bottom came back today, but we have one simple criteria about a fry pan bottom. We stay long as it doesn't close below the T-line. So to stay in this one, we definitely want to see it open positive and trade positive. Tahoe, look at that chart. J-hook pattern. Doji gap up. Broke this level. That tells us we're probably in wave 3, heading up much higher. Yeah, whiting we were going to get to. Whiting, look at what type of pattern it's doing. It's doing that slow curve. And it's probably because we're seeing crude oil at least slowing down in this downtrend, if not moving sideways a little bit. Again, hold on to your individual stock questions. I've got about 20 stocks that all have something viable to look at. There's that fry pan bottom on CFMS. Still did kind of a shooting star. We're not quite in the overbought area, but what's the main criteria? That fry pan bottom. And notice what it couldn't do on the pullback. They couldn't close it below the T-line. So anytime I see a pattern, let's see if this is a pattern. AD or AXDX, very simple uptrend. Why? Because it had the strongest of all the reversal signals. This is a kicker signal. Notice how it opened here and closed here. Let's make this big enough where we can see it. It opened here and closed here. Notice what happened the next day. They gapped it up at or above the previous day's open and went that direction. That told you they kicked the investor sentiment in the opposite direction. You're going to have a very strong price move. Another pattern that we were in. SHPG. Notice what it did today. It still held up pretty well, even though the market was off big. But look at the pattern. This is what we call a scoop pattern. You have a flat handle, and then you have that scoop. And how did the scoop start? With your best friend, doji gap up. So you got little scoop, and what do we expect coming out of a scoop pattern? A good, strong slingshot effect. Let's see. We did all the golds. All the golds are acting very well. You could be buying these on positive trading tomorrow. ACAD, another one that we're hanging on to. Because look at your big fry pan bottom and notice where the resistance level is. Right about the same level this fry pan bottom started. Now it sold off today. Makes this very simple. If they open this lower tomorrow, we close out the position because we'll have what we call a bobble, where they pull it back to the T line and then bounce it back up. How would you see a wave? A wave is just telling us that there's a move and then there's a counter move and the next move. Not anything to do with Elliott wave. The only thing Elliott wave really made obvious to us is that prices move in waves. And I'm not interested in saying something long enough to go through wave 1, 2, 3, 4, 5 with an ABC retracement. I'm looking at, if I'm buying wave 1, see wave 2, I'm taking my profits. If wave 3 starts, I'm buying back in again. So there's that slow curve on ACUL, but notice what it did today. It didn't back off from the 200. It stayed right up there. So we want to see what this one does tomorrow. If it goes through, you stay long on this one. If it opens lower, you take your profits. You can always buy it back if it comes back up through the 200. Again, this is all high probability setups based on human nature. Here's that little wedge J-hook pattern. Again, this is what we call the classic. There's your fry pan bottom. There's your strong price move. There's your consolidation. And what they tell us today, even on a day when the market was off big time, they were breaking through going into wave 3. That kind of illustrates the fact that patterns have price movements that are developed with all the cumulative knowledge. And part of that knowledge is if the market's selling off, if the pattern is still working, that means they're buying it for some reason other than what the overall market is doing. SRPT, another one that held up pretty well. Notice they had a little doji gap up. If they open this positive, look for a doji sandwich, which would eventually take us up to the 200. Same type of setup on ALDR. These are all trades that we're in right now. There's your best friend. There was your consolidation. Now you can see what's happened after the consolidation. We're either in a 45 degree or we're getting ready to do a J-hook pattern. ZYNE, another one that we've been participating in because it did a little left-right combo. Once again, it held up pretty well today, even though the market was trading off. Where's our first target? There's a little gap right here. If they can hit that gap, we've still made about a 30% return on that trade. Oh boy, I've got a whole bunch more. Let me go through some of the biggies real quick. There's Apple. What did Apple tell us? They failed up here at the 200. Where is it going to come back? Well, if it breaks this trend channel, could be the 50. You could throw your Fibonacci retracement on here and see which level. Not that it's going to get to one of those levels. What we're doing is just putting our looking for where we might see a buy signal. Is that a cradle? Oh boy, Gerald, you got to type in which chart we were looking at the time. And then you can see what's happening in Netflix. They aren't selling it off. It's still caught in between the T-line and the 200, which makes this very simple. If you're long, you don't want to see it close back below the T-line. That would tell you the 50 or the 200 has failed. They're probably coming back to the 50. To stay long, you want to see it stay above the T-line. If you're looking to buy, you buy it as soon as it comes out on the up through the 200. So we're also looking for things on the short side. We'll do a few of those real quick. We can see there was a doji sandwich in GameStop. What was another criteria for thinking they're starting to sell this off? Stochastics rolling over, and you can see there's kind of a resistance level right here, and it closed below the 50 today. That makes it very easy. What do we expect after a bearish doji sandwich? More downside. So this puts us in a high probability situation that if the market opens up weaker tomorrow and this is opening lower, you can be shorting it because they're probably bringing it down much lower. Same scenario on our recommendation to go short on LPLA. We recommended short if it opened lower yesterday, but it didn't. But notice what it did do yesterday, a shooting star. Looks like a shooting star, but and where did it close? Closed back below the T line and the 50. We were re-shorting it, or we were shorting it today because that was confirming. Once again, notice what it failed. It failed at the 50, and what's our trend telling us? We're still in a downtrend, and every time they come up to a resistance level and fail, that means they're probably coming back down toward the trend channel. Let's see. We showed CBI. No, maybe we didn't. But notice the doji, bearish doji sandwich. They're still taking it down. What is it? Oh, Freeport, Macman, kind of dumpling top. They're still taking this down. Oh, William, let's do that tomorrow. The percentage profits on futures are I mean, you're highly leveraged. The only thing I can really give you real quick is when we were shorting cattle, we were short cattle this day, it was down the limit. That was 30 cents a pound. The margin required to be in one contract of cattle is, I think, about $1,320. The move yesterday, or that on that day, down 3 cents or 30 cents, was a $1,200 move. So your $1,300 worth of leverage produced a $1,200 profit. Oh, on GameStop, no, there's no cradle on this one. Okay, a couple more, and then I'll tell Jim to do the double line. This one, as you can see, broke this kind of little channel here, broke down. That's ZUM. And then something like HZO also had bearish signals, broke kind of this channel. There's your bearish doji sandwich, which we expect more downside. To the downside, GME. Yeah, there's really no cradle. A cradle is a flat trading area with a big candle up, a flat trading area, and then down. This is just kind of a rollover. Okay, so before we start doing individual stocks, are there any questions on candlesticks in general? There's a big bearish engulfing signal on CarMax. Remember, in candlestick analysis, the bigger the signal, the more compelling there's been a change of investor sentiment. What are the numbers to the right? Well, these are stock numbers over here. It closed today at 49.48, just below the $50 level, 52. So they aren't percentages. They're the price. Can observing the T-line on a weekly chart augment a decision to stay in a trade when there's some minor closes below the T-line? Yes. If you're looking at something that has had a long uptrend, for example, if this was a stock, and then you had this, which is not, this is Dow, but if this had been a stock and it finally closed here after a long period of time of staying above the T line, I'd say, all right, I'm going to give it another day, but it needs to open positive and trade positive, which it did. However, what I don't want to see it do is close back below the T line, so I might put my sell stop right back down here, because if this is going to stay above the T line, I don't have to worry about it. If it came back down through here, it was coming back down through the T line. When you say it opens positive, can it open and go negative in an hour? Certainly. But we're buying things on the basis that if there's a candlestick reversal signal and it opens positive in the right conditions, that the probability is extremely strong that it's going to be moving in the right direction. Now remember, about 1/3 of the trades that I do are not going to work. So I close out those pretty fast and then move on to move that money on to another one which have probabilities in my favor. The exact definition of the T-line is a 8 exponential moving average. What's the best time to get into a belt hold? Oops, that wasn't it. When you see it confirming, this is a belt hold. Belt hold is when they gap it way out of the trading range and bring it back up into the trading range. That's your reversal signal. Now, if you're really adept, aggressive, once you see it open down here and it starts trading positive, the nice thing about candlestick charts is that chart is going to start turning green. And what's it mean when it turns green? It means after they've opened it, the buyers are stepping in. So if you had been following this, ready to buy it, and they gap it way down, and then you see them starting to buy, yes, you could be buying at that point. I would be buying at this point, waiting to see that they confirm that signal. Okay. In an option, do you have percent rule of loss? No. The percent rule of a loss doesn't mean a hill of beans. The market doesn't care what you bought and where you bought it. What we're buying and selling is what the chart is telling us. We're buying when it's time to sell, and we're selling when it's time to sell. Did I say that right? We're buying when it's time to buy, selling when it's time to sell. That could be a 0.3% of a percent loss. It could be a 13% loss. It's based on what the chart is telling us. Okay. All right. Oh, I got you way past time. Jim, go ahead and do the double line. Everybody just do one tick, and I'll try to get as many done as possible. And now do the second double line. Blue, very simple. Getting up here, you did a kind of a shooting star. Trying to make this bigger. To stay long, it has to open positive and trade positive. At this point, if it trades back below today's low, I'd close out the position. Because what's our simple rule of a doji? It's going to move in the direction of how they open it after a doji. Devon oil. There's your kind of your cup and handle. You can stay long if you're long. If you're buying it, I'd put a buy stop right here. If it breaks out, out through this level, it's telling you it's going much higher. And trip. Trip, I wouldn't be long or short. You can see you're in the trend, have no direction to it, so your risk reward is not very great. If I was going to short it, I'd wait to see if they could get it down through this level. Then I'd short it. But right now, I wouldn't be long or short just because there's no definite direction. AGIO, same scenario as Devon. If it opens lower tomorrow, what's it telling us about this level? It failed at this level. It's probably at least coming back. Now, that's your fry pan bottom. It should be breaking out. If it opens lower, obviously it's not breaking out. Schlumberger, another one that I wouldn't be long or short. It's in a sideways trend channel. Yeah, wouldn't be doing anything with it right now. Oops, I meant to do Google L with the biggies. Google L also wouldn't be trading long or short on this one. This is the exact reason why you use the T-line. It's telling you there's no direction. It's above the T-line, below the T-line, above the T-line, below the T-line. That tells you move on to something else right now. Did we do Netflix? Netflix was caught in between. Let's say Amazon. Amazon, if you're long, it has to open positive tomorrow to stay in it. VSLR, it did your little best friend gap up. It's pulled back. I wouldn't want to see it trade below the T-line. That tells me it's lost its energy. It needs to really open positive and trade positive tomorrow. So if you see any weakness in it, I'd close it out, and then I'd just wait to see what it was going to do once it got to the T-line. FIT did kind of the same thing. Even though it's coming off a kicker signal, it closed back here. I closed it out just because right now I'm anticipating they're going to come back and test the 50. And the reason I anticipate that is with the market being as soggy as it was probably time to be out of that trade and just wait for the next buy signal. UVXY. Again, you're right now in a choppy area, but this is the short VIX or the VIX. So obviously, if it opens higher and trades higher tomorrow, it means the market's heading down. Lulu might be reasonable or too late. No, you're notice you had your dark cloud, gap down, bearish doji sandwich. Now they've confirmed. Where do you think your first likely target is going to be? Down here. That's the probably the obvious, going back to the bottom of the trend channel. HIMX had a good chart today. Also bouncing up off the bottom with a bullish engulfing and confirming. You can be buying this one on positive trading, and your next likely target is the top of the trend channel. Pfizer, I guess Pfizer now they're out of the big deal. Came right back up. At this point, I would use today's low as my stop. It closed up here. It should be moving in this direction. If it comes back down through here, that tells you they're getting soggy here at the 200-day moving average. Citigroup, you can go short on this one. You can see kind of the dumpling top rolling over. It's not a very exciting stock to trade, but at least you can see right now that it would be heading in the wrong direction. BBT, same scenario. You can be shorting this one. You had your doji gap down through the 50. After this dumpling top, that means the force of the selling is going to start picking up. Trox, you can get ready to go short on this one if you can. I can't remember, but it's also failed up here at the 200. The fact that it got a doji, bearish engulfing signal, stochastics rolling over. Pretty good prospect. They're going to, if the market stays weak, they're going to bring it down to the 50. Blackstone, I probably wouldn't be long or short on this one. It's in a sideways mode. Whoops, what did I do? DPXX, that's not coming up. There's a CPXX, which you stay long. It's in a J-hook pattern. And MCRB, you can stay long on this. Now, very simple stop loss criteria. If you start getting up in the overbought area, I always put my stop at the previous day's open. If there's enough strength to come back down through there, you want to be out of the trade. That means the sellers have taken control. INSM, you can be buying this one on a positive open tomorrow. You can see kind of the fry pan bottom. A positive open would give you that bullish doji sandwich breakout. MPC, this one you can be buying. Observe the obvious. They came up through the 50. They couldn't close it back below the 50, and notice how decisive they were on the 50. Very indecisive. Now you have that hammer doji left-right combo. That's a good-looking chart. As a matter of fact, that will probably get a little star next to it. Oh, that's Marathon. Yeah, that's a high probability trade. And if they come up and they support on the 50, where do you think the next likely target is? Coming up here to the 200. Panera. Oh boy. I probably wouldn't be long or short Panera. Not enough energy in any one direction. And UBIO. Whoops, apparently I didn't hit the right button. Another one that has to open positive and trade positive. You're up here in the overbought area, you did a bearish harami. I'd put a sell stop right here at today's low. If it moves down through there, they're coming back to test the T-line. And Tesla backed off, but didn't do a sell signal. It just was a down day in an uptrend. I wouldn't be, I'd hang on to Tesla as long as it doesn't close below the T-line. Oh boy, what was that? That's not found. XLRN. Doji Harami right here at the 200 in the overbought area. Very simple. It's going to move in the direction of how they open it tomorrow. SSE. Oh, that better have huge volume for a $60 stock or 60-cent stock. I wouldn't be doing anything yet until you see some more strength in it. And CLG, another one that has to open positive and trade positive. If it opens lower, take your profits. You can always, if it opens lower and starts down and then turns around and heads up, you can always put your stop right back here again and buy back in as it comes up, telling you that the profit taking is over. Costco, I wouldn't be long or short this one, but if I was anything, I'd be ready to go short if it started coming down through the moving averages. We did Amazon. And PACB, another one that was in a fry pan bottom that needed to break out, and it didn't. Now, it hasn't closed below the T-line, but if it opened lower tomorrow, I'd close it out if I was long, which means it has to open positive and start trading positive tomorrow. The E-minis, you can see what happened. They were rolling over also. And PVHO. Did I do that one right? PVHO, not found. All right. CDNS. Not really a dumpling top. A dumpling top, you can see the big curve. This just closed back below the T-line. It traded back below here before. So what I would do tomorrow is if it opens positive, it better trade positive. If it opens positive, you put your sell stop at today's close. Because if it opens positive and comes back down through there, you now have another sell signal. If it opens lower, you close out the position. No. What's the definition of a dark cloud? Well, dark cloud has to open above any of the trading of the previous day, which it didn't do. This is just a down day. Under Armour. Still in a sideways mode, I probably wouldn't be long or short this one. If I was going to do anything with it, it would have to have another big bullish day tomorrow, making a McMuffin, Morningstar signal, and a doji sandwich, and then I'd probably use any trading above the 200 to get in. Visa, another one. We've seen all the dojis up here. If this opens lower tomorrow, you close out the position. PRMW, I would suspect they're going to be bringing this back to test the T-line. Square, this one has to also open positive. If it opens lower, failed to get to a new high, you're probably not going to have any strong move for a while. NQ Mobile. Notice all the dojis and notice the direction, which is nothing. So your risk reward is we don't know whether it's going to go this way, or this way. The whole point of using candlestick charts is it tells you with a high probability which way it's going. So if you get something that tells you have no definition of which way it's going, close it out. But you also know with a bunch of dojis, when they move it, they're going to move it pretty strong one way or the other. So if I close this one out tomorrow, I'd put a buy stop up here at maybe 485. If it comes up through there, that tells me which way they've taken it. JC Penney, you probably want to be out of this one. If you're short, you stay short with the anticipation they're going to come back at least to the 50 or possibly the 200, which would be filling this gap over here. AEM, one of the mining stocks, you can be buying this one. You can see how it broke this downtrending channel. There's your little left-right combo, which was a doji, followed by a bullish engulfing signal. And they gap it up. That tells you you're now in a new wave. TRXC, this one has to open positive. The warning here was your gap up in the overbought condition. Made this very simple. If it opened positive, you put your stop back down here, because if it came back down here, you'd be a gap up, spinning top, followed by a bearish engulfing, which you did. This one has to open positive. If it opens lower, I'd close out the position. And Yahoo, this one you get ready to go short. Notice when they took it up today, they brought it right back down below the T-line. You got lots of indecision here. Now they've told you which way they're going to take the decision, which means the 200 is now your likely target. And Twitter, I wouldn't be long or short. There's nothing there. I'd be someplace else. PVHO, still not coming up with anything. INGN. You can stay long, but the same scenario. If it opens lower, you close out the position. You're in the overbought condition, and you're seeing a candlestick sell signal. XLV, also a bearish harami as you're climbing up toward the 200. It's going to move in the direction of how they open this one tomorrow. Whoops. Bed Bath & Beyond. Notice it broke out, but then came right back into the trading range, which means it failed. I'd be ready to, I'd put a sell stop below today's low. I'd be shorting it if it comes down through there. Cree, these are toughies. Now, more than likely, they're going to be bringing it back up slowly until they run into the T-line. Then you just have to see what they do once they get to the T-line. And UBIO has to open positive to stay in it. Let's see. Rosetta Stone. Right now you stay long. You can see you're in the next wave. You wait a certain time after the open where you make your decision to pull the trigger. Ron, if everything's setting up, if we think we're in an uptrend and they're the market is opening slightly positive or positive, and the stock that I think should be opening positive is trading positive, I'll probably buy it immediately on the open. If the market's opening positive and the stock that I think should be opening positive is opening lower, I'm not going to do anything. But if it comes back up through the previous day's close, which means another bullish candle is forming, then I'll buy it. If the market is opening lower and the stock that I want to buy is opening positive, I won't jump right in it. I'll wait to see if it's being affected by the sell-off in the market. To see if it's going to continue up anyways. And then the fourth entry strategy is if the market's opening lower and the stock's opening lower, I'm not going to do anything. Nothing's working. ACAD, get ready to close this out if it opens lower. Tesla didn't do a dark cloud. It didn't open above the high of yesterday. So all this is a down day and an uptrend. And Dish is a short if it opens weaker tomorrow because you got that big dumpling top. Okay, we're going to just do a few more. MBT, nothing of any great consequence here. As you can see, it's not a very fast mover. If you happen to be long, you can stay long, but I wouldn't want to see it close back below the T-line again. Did we do Panera? You want to be short, kind of a kicker signal to the downside today. SM, you can be buying this one on positive trading tomorrow. Ron, I don't know which one that is. Same move on March 10th. March 10th. Yes. That's why you have to make sure it opens positive tomorrow. Price line. If you're short, you stay short. Notice your little evening star signal here told you that they weren't going to get up through the T-line. I imagine they're drifting this down. They're not quite in the oversold area. They're drifting down to see if it's going to support on the 200 one more time. T-net. Right now, all you do is stay long. You can see you're in a little fry pan bottom cup and handle. And PGNX. This one you can be buying on positive trading. I would just use the T-line as your stop. Okay, I think we should have gotten most of them. Rob, if I'm buying on a time frame, it's based on probably we're going to be recommending Nugget again. We're already in the calls on Nugget. But if it opened positive tomorrow, like it opened positive today, then I just flip to my 10-minute chart. I don't know where that there was a 10-minute chart. Started trading positive. Once it got up there, notice what it did for the rest of the day on the 10-minute chart. Really didn't move. But when it gapped up, you could be buying on the next 10-minute, or this is the 5-minute chart. Maybe it will be a little bit clearer on the 10-minute chart. 10-minute chart. Once it opened up, really didn't sell off any. So once it opened up, it stayed up there. Okay. Do you have one trading room for futures only? It's the futures and the options room combined. Because the terminology for trading options as well as futures is different than what you'd see in the regular stock room. All right, everybody. Have a good evening. We will hopefully see you in the chat rooms. We'll see you then.